The price of a Bitcoin was again above $20,000. However, it is uncertain whether or not it will continue to rise from this point forward. Over the course of the past 2 weeks, the price of Bitcoin has been reasonably consistent despite its low level. The price is almost always maintained at around $19,000, with only infrequent excursions into the high 18,000s. How do you believe its reliability will hold up over time? Relax, Billionaire Crypto Investor has got you covered. Bitcoin's steadiness comes at a time when other assets, like gold, foreign currencies, and stocks, are seeing steep declines as a result of the Federal Reserve's efforts to further constrain monetary policy by increasing interest rates. Bitcoin's recent robustness may be due to the fact that long-term investors are keeping steady and are unaffected by the warning signs that have been appearing in the economy of the United States. Having said that, Bitcoin has suffered over the past couple of weeks, finding it tough to claw its way back up to over $20,000. Even maintaining its position above $19,000 has been challenging. Risky assets are struggling as Powell's fight against inflation will remain aggressive for an economic slowdown, says Edward Moya, a senior market analyst at the brokerage firm Oanda. The falling prices seen in the stock and cryptocurrency markets are being attributed by experts to a number of factors, including the possibility of an economic recession, rising interest rates, the ongoing conflict in Ukraine, and persistently high inflation. The cryptocurrency market has been progressively tracking the stock market as of late, which makes it even more interwoven with variables that affect the economy as a whole. Since December 25, 2021, the price of Bitcoin has not been higher than $50,000. Bitcoin's price has seen a nearly 70% drop in value since its all-time high above $68,000 on November 10. This decline has been caused by surging inflation, a lagging recovery in the job market, and the Federal Reserve's ongoing signals that it will begin winding down pandemic measures to support the economy. Bitcoin entered 2022 on a pretty high one, despite having a slow start to the year, with a strong November and early December that gave way to the recent downward trend. After beginning the year 2021 in the area of $30,000, Bitcoin's price continued to rise throughout the year and reached its current all-time high on November 10, when it soared over $68,000. Despite Bitcoin's price has dropped dramatically from its most recent all-time high, many industry analysts continue to forecast that it will surpass $100,000 at some point in the future, describing this as a question of when rather than whether it will happen. When the price of Ethereum climbed above $4,850 in November, long after Bitcoin reached a new all-time high that month, Ethereum also reached a new all-time high of its own. Following its most recent peak, Ethereum has demonstrated a similar degree of volatility. The price of Bitcoin reached its first high of the year in 2021 when it soared beyond $60,000 in April. The price fluctuation that has occurred since then demonstrates the volatility of the cryptocurrency at a time when an increasing number of people are interested in participating in the market. Bitcoin saw huge price swings in the weeks between a low point in July that put it below $30,000 and its most recent high point in November. The future of cryptocurrencies will almost certainly involve a great deal more volatility, and specialists agree that this is to be expected in the market. Because of this particular factor, the investment professionals and financial consultants that we consulted caution against devoting a significant portion of one's portfolio to the asset class. They collaborate with customers to help ensure that volatile cryptocurrency investments do not interfere with other important financial goals, like putting money away in an emergency fund or paying off debt with high interest rates. What does this drop in price mean for investors in cryptocurrencies? Price fluctuations are something that should be anticipated by anyone who intends to invest in cryptocurrencies for the long term, utilizing a buy and hold strategy. According to Humphrey Yang, the personal finance guru behind Humphrey Talks, who says he avoids examining his own accounts during unpredictable market falls, big dips are nothing to be unduly worried about. Yang says, referring to the crypto crash that occurred in 2017 and resulted in a significant loss of value for many of the most prominent cryptocurrencies, including Bitcoin. I am aware that these things are quite volatile, and that on some days they can drop by as much as 80%. The percentage of your overall portfolio that should be allocated to cryptocurrency investments should be less than 5%. If you have done that, then according to Bill Noble, the chief technical analyst at Token Metrics, a cryptocurrency analytics platform, you need not worry about the swings because they will continue to occur. Volatility has been around since the hills were formed, and it's not going anywhere. It's something that you're going to have to work through. Yang recommends using the same strategy that works for all long-term investments: set it and forget it. This is the case as long as your cryptocurrency investments do not interfere with any of your other financial goals, and you have only invested the amount of money that you are ultimately okay with losing. If a decline of this magnitude and speed disturbs you, it's possible that you have too much riding on your cryptocurrency assets. You should only put money into investments that you can afford to lose. But even if the dip has caused you to reevaluate how you are investing your crypto assets, you should still heed the same piece of advice. Don't be hasty or change your approach too hastily. Think about what you might feel more comfortable doing moving forward, such as decreasing the amount of money you put into cryptocurrencies in the future or diversifying your holdings by investing in blockchain-related equities and funds rather than buying Bitcoin directly. What should you do if you're considering investing in cryptocurrency but haven't done so yet? However, some industry professionals believe that cryptocurrency is too different from traditional investments to make any meaningful historical comparisons. Due to the novelty of cryptocurrency and the absence of data that can be tracked, it is skeptical of these erratic swings. If you are a potential investor wanting to purchase the dip, you should be aware that variations are to be expected in the market, and you should also be prepared for this kind of volatility moving forward. If you invest now, when prices are relatively low, you should still be prepared for them to drop much further in the future. Again, you should only invest money that you're willing to lose, and you should do so only after you have taken care of your other financial objectives, such as having an emergency reserve and a more traditional retirement fund. What caused the most recent drop in Bitcoin prices? Volatility is difficult for individual investors to deal with, despite the fact that many investors view Bitcoin's price swings as an expected part of the game. Recent price variations are a clear indication of the increased volatility that the cryptocurrency market has been experiencing in recent times, despite the fact that significant macroeconomic events appear to have less of an influence on that volatility lately. It doesn't take much for the price of cryptocurrencies to make significant changes because the industry as a whole is so new and unproven. Even while variations are to be expected, Noble claims that he has been taken aback by some of the most recent significant reductions. I was under the impression that the market was maturing and that as a result, events like these would become less frequent and severe. But he was wrong. He compares the dip to the crisis that occurred in the stock market in 1987, from which it took the market several months to recover. Noble, though, believes that a quicker recovery may be possible given that the pace of crypto transactions today is significantly higher than that of equity markets in the 1980s. Don't panic and throw up. If you limit the size of your positions, you can give yourself a better chance of weathering the volatility. Is the risk associated with crypto more significant than it was a year ago? Tell us what you think in the comment box that can be found below. And with that, we will see you on the next topic. We truly hope that you had a good time watching the video. Additionally, we rely on the support of our audience. Therefore, viewers, please subscribe to our channel so that you can witness more incredible evaluations.